Welcome traders, I'm Adam Harris, Chief Market Analyst, and bringing you to this courtesy of YouTube and obviously investing.com. I'm going to have a look at this week's economic calendar, and I'm speaking to you today from Herne Bay in the United Kingdom, near the coast, close to that kind of tip just across from Cliffs of Dover, just across from France. And it's finally starting to warm up. It's the first week. We don't even have to have the heating on in the house. Anyway, so not that you would care about any of that. So let's have a look at the economic calendar. So first of all, the Royal Bank of New Zealand interest rate decision. So the economy in Royal Bank of in New Zealand is not really kind of doing that well at the moment, and so I really want to pay attention to this. I don't think they really want to cut rates. I think they want to maintain them. They say that they want to do it. It's forecast. So the question really is, will there be a surprise rate cut of 25 basis points or something, for example? So let's have a look and see what goes on there. I think the US economy is still solid. So just please remember that there is a massive amount, never before in my life have I ever seen the disinformation machine at the moment that is creating so much misinformation around. There's a big election in the US and there's just so much hard work, especially Russian-backed misinformation, disinformation. It's just incredible. So please be aware that your eyes and ears are potentially will conflict with what you hear. We can see the numbers are good. We know the numbers are good. The US economy is super strong. It's very stable as well, just kind of is maintaining that and ticking that over. I do want to hear what the FOMC has to say about potential rate hikes or potential rate cuts. And one of the issues they have at the moment right now, corporations are announcing record profits. We've got shrinkflation, so we've got smaller products being charged at greater prices. Some of them have increased their prices by as much as 85% in the last 4 years, some as much as 100%. So imagine prices doubling in the last 4 years. Can't really complain that life is tough if that's what you're doing. And so in the past, they've actually targeted corporations specifically not to do that. But we'll see whether that's something they do now or whether they kind of hike rates. We'll see. Or they talk about rate cuts if that's finally going to be something on the table. But inflation is not under control, and therefore, and the economy doesn't need stimulation. So rate cuts don't make sense right now. Not only that, okay, so let's have a look. So then we've got Europe. So let's have a look and see what's going on with the ECB interest rate decision, see what's going on there. What's the state of inflation in Europe? We don't have to worry about the US for now. Yes, we've got initial jobless claims. Be interesting to see if there's a surprise there. But for the most part, the US is probably going to be stable for the rest of the year. So we really want to focus on what's going to happen with non-US countries or economies. The UK as well, GDP. We're supposed to be in a recession. What's going to happen with the GDP this coming week? Let's go and have a look at that. We'll have a look at the charts in a moment and see kind of what's going on there. But yeah, please be aware of that. Follow the charts. If there's a conflict between what you're seeing on the charts and what you're reading in the media, you always go with what the charts are saying. The charts always give you the accurate pricing. Okay, and then they can't be spun because they're actual prices. So let's go across and have a look at the charts. Okay, so the VIX showing a slight tick to the upside, but nothing new. I mean, we were higher up in October last year. We're still kind of in this area, and so tick up to the upside, nothing to be concerned about at this time. And just we'll keep paying attention to that. We'll see. I'll let you know if there's anything that I'm kind of concerned about. And this is where we get to some interesting stuff. We look at that dollar index. You can see that we came down, tested support on Thursday, and then on Friday with non-farm payroll, we had the market kind of swish around. So the question now is, are we going to find some resistance where we are at this 104 level and subsequently take a knock this coming week? Or is it going to shrug off Friday's movement and basically carry on? So if we go have a look at euro dollar here. When I look at this, it actually looks, especially when you go down to say the 4-hour time frame. So let's just drop this down to that 4-hour time frame, and the 4 hours starting to look more and more bullish. Okay, so why do I say that? Well, we've broken kind of through this downward sloping trend line. We've broken above the 50-period moving average. The 50, 20, and 10 have gone bullish. Prices coming back down and testing it for support and produced a nice bullish candle. So in isolation, that's actually a bullish formation. And we have the same when we look at other pairs. It's the same thing when we look at sterling against the US dollar, the Aussie dollar against the US dollar, and the Kiwi against the US dollar. They're all showing the same thing. So I want you to kind of witness this for yourself. So they're all kind of producing very nice. This is a potential inverted head and shoulders, albeit a very messy one. Aussie dollar really breaking to the upside, coming back and testing that for support. This is on the 4-hour time frame. And just remember that, you know, you kind of have, it's just over the next 5 days, and you really kind of, very few people are going to be sitting in front of their computers for more than, 3-4 hour sessions. That's 12 hours. So you're usually going to be in front of your computer maximum either 1 4-hour session or 2 4-hour sessions, 8 hours. Very rarely 12 hours in front of your computer. That's not very healthy. That's a bit ridiculous. It's excessive. We shouldn't be doing that. My point is this, is that really only leaves you kind of somewhere between 12 and 15 4-hour kind of sessions that you're going to see over the coming weeks. So I can use the 4 hour as a relatively good gauge of what's going to happen. So based on what we see on the 4 hour here, the market looks as though we're going to see a weaker US dollar, but that's only because of Friday's behavior. If Friday basically was just swishing around as a result of non-farm payroll, and basically that just you get Mondays where Mondays can sometimes just reverse on the Fridays, we would then go back to a stronger dollar. So just something to be aware of. If you suddenly find that Monday reverses completely and suddenly you get a stronger dollar, then that is going to be the explanation for that. Let's just go back to this one and change this back up to the daily. So just be aware that that is something that can happen. We're getting some mixed results, but right now it's pointing at a potential weaker US dollar in the coming week, a bounce off that resistance level. Let's then have a look at dollar yen. So dollar yen continues to push up against that 150 level. I know it's 151, 152 in that area. It continues. So notice the flow of price is still very much to the upside. But the reality is as well is that the Bank of Japan ultimately don't really want that to be the case. So they're going to potentially tinker a bit with policies, raise interest rates, do a few other things so that they can kind of ideally change the course of the weakening yen sooner rather than later. But the fact of the matter is, from a technical perspective, the yen pairs are still trending higher. And in fact, a lot of them are set up with very bullish setups. If we just move across to this and have a look, euro yen set up with a nice bullish continuation setup. Pound yen has set up with a bullish continuation setup. All of the yen crosses to a degree have set up with bullish setups. So technically they look bullish. The question is, will any of the policies, are we seeing the yen pair starting to run out of steam? So from a trading perspective, the approach is relatively simple. You have a couple of choices here. You either take the trades to the upside, you follow the technicals, you take the trades at a full percentage risk, whatever that is for you personally, based on your personal risk management plan, or you reduce your risk exposure, or you don't take the trade at all. All right, so that's a personal choice. If it was me, again, then this is subjective. I would consider taking long trades because the technicals are bullish, but I would not go to full percentage at, full 1%. I'd go to 1/4% or 0.5%. I definitely make sure I'm taking partial profits at 1-to-1 or 2-to-1. So that's the kind of thing that I just wanted to draw your attention to. Be aware that that's a kind of conflict that we have. When we look at the dollar Swissy pairs, they're still looking particularly good. They are a little bit overextended on some of the dailies, and this is a potential head and shoulders forming here. So yes, this is hinting at a possible weaker US dollar. And then we've got dollar CAD, at dollar CAD, where we're just not really going anywhere. It's a bit garbage at the moment. Interesting, we see crude oil starting to look really good. Crude oil continues to produce a really nice quality trend, very good for buy opportunities. And there's often mention that there's a correlation between the Canadian dollar or dollar CAD and, say, crude oil. Right now, I'm not really seeing it follow through. It's still very choppy. I would definitely not engage on the dollar CAD now because of some supposed correlation with crude oil. I'll just go straight to crude oil. One more thing I want to add in is I do think dollar Swissy is its trend. I think its medium and longer term trends are going to become more bullish. I think some of the Swissy pairs are going to be offering some of the best buying opportunities probably through Q2 and potentially through Q3, just even though right now we might get a bit of a retracement on dollar Swissy. All right, let's move on to gold. Gold is properly overextended on the daily. It's very nice and strong. You can see it here. It's overextended on the weekly and it's overextended on the monthly. So there's a risk here engaging in it with buy sides. I'm still bullish on gold as I have been for the last few months. I'm just looking for some kind of a pullback and a pullback to 2200 or even further. All of those would be really good buy opportunities now. But the truth is it's overextended on multiple timeframes and the risk is very high of becoming a buyer at this time. Silver, on the other hand, is playing catch up. So look at how nicely silver, this was a relatively easy trade. There was a nice solid buy setup on the weekly. Nice little pullback to the moving averages, bullish candle. I don't know why I didn't mention that last week, so that's on me, mea culpa, and that was a really nice strong move. I wouldn't have known it was going to be a strong move. I do know that I spoke about last week about its potential to the upside. It's also a very strong bullish engulfing candle there. Potentially it's just going to continue up a little bit more and then take a bit of a breather, but for the newer traders, it is overextended to the upside and it is due for a correction potentially over the next week. And one more thing that I should mention is this week I am going to Jamaica. So I haven't been before. I've never been. I'll be in Montego Bay. And so potentially I will do next week's analysis from Montego Bay. We'll see how that goes. And hopefully I don't get sick when I'm over there. But yeah, so looking forward to that. There's quite a few trips this year. And then of course after that, I'm then in Greece. Okay, so let's have a look here. Let's go to copper. Have a very quick look there. Copper's nice and bullish. You can see metals are doing very well at the moment. Supported a little bit by that weaker US dollar. Okay, we've got coffee. Big strong move as well. So commodities doing very well. Let's have a look at natural gas. Natural gas just stumbling in this area. So I've got nothing to add to that. I go on about natural gas way too much. Like crude, very nice and bullish, guys. Overextended. Any pullbacks here for me are buying opportunities. So any kind of pullbacks into the moving averages for me are buying opportunities. It's overextended. This is not a buying period. This is a wait and wait for that correction to come. Okay, so let me repeat, this is not the time to buy. This is the time to sit on your hands and wait for price to kind of pull back into it. West Texas as well, same thing this week, looking for that pullback into the moving averages. Would it be a pullback to 85? It could. That would be a very shallow retracement. A pullback in towards 82.50 would be great into the previous high. So any of those two would make a lot of sense. Let's move on to the global indices and see what's going on here. So we're getting a very strong reaction back down to testing these levels. We're slipping below that 50-period moving average. So what does it mean? It means that actually we need to move across to the next chart. So we move up a time frame to the weekly. The weekly is doing a retracement. So the question now becomes, is this a weekly retracement? Will we get a green candle this coming week in this area? Will we find the market is so bullish that it finishes up near the highs this coming week? The market is very bullish. There's a lot of buyers, but it's too hot. It needs to have a correction. And really, when we're looking from a monthly perspective, we're setting up here with a potential bearish candle. This could possibly lead to a correction down to 38,000, down towards 36,000. Those are great things. Even if you're an investor, that means there is a potential buying opportunity when we get down to those levels. Okay, if you're a trader, it's a good opportunity when we get down to those levels. So just be aware that the possibility exists that we could retrace where we are now. We could sit up bullishly and carry on from here. But a deeper correction down to 38,000 and down to 36,000 is better. It's better for everybody. Okay, we can't get too overbought. We need to have a nice healthy correction. And if we have one in the coming weeks, it's good. Remember, we've just started our bull market. We're going to be in a bull market for the next 5, 7, 10 years. We need a correction. This would probably be the very first or second pullback within the current new bull market. S&P 500, okay. That was me saying coming back into this area. So that hasn't really changed. Is that where we're going to pull back to? Let's have a look at that. That was our very last pullback. We need to get another one. I think what I'd be looking for this week is a break of not just these lows here, but a break kind of around about that 5,165 level. And I want to see a pullback to 5,000, a pullback to 5,000 or a pullback to 4,740. Amazing. And it would be good for us. And anyone who tells you it wouldn't be good for us is talking out their ass. Okay. NASDAQ as well. Look at this. Nice little double top, starting to consolidate. It could consolidate before continuing higher. It could do that as opposed to a correction. A correction is always much better. It's always profit taking. It allows us to get back in. It allows us to start a new leg up from an earlier position and therefore allows us to compound. So if you take advantage of compounding, which obviously you should, then you would take advantage of through these lower levels. Russell 2000, also stumbling a little bit where it is. He has just managed to get outside of the range. I would prefer to see a smaller correction here, but it is what it is. I say that for the most part, it'll probably stand this here, maybe come back down and test 2000, and then we'll see what happens. The FTSE as well, starting a little bit of a high. And again here, it's at these all-time highs, a bit of a pullback. I would say potentially as far back as 7.7. Excuse me, but I'm thinking probably 7.8. All of those would be really good retracements. The markets might be so bullish that they literally just do the minimum, the bare minimum, just come back in, touch the highs, just touch the 10-period moving average, and then take off again. Okay, so we'll only really know by the kind of end of next week. Here you can see as well, look at the DAX. DAX has had a great run. The DAX could definitely benefit from coming back down. I want to say 16.5. I want to say 16.5. That would be a 50% retracement. That would be amazing. 17,000 will also do just fine. It would be really good if it could do that. These are fantastic opportunities over here. And here's the thing. They would potentially turn out to be monthly retracements, which means then that the next bull run or the next leg up that's going to happen after that would last several months. Here's where it gets kind of economically interesting. Is this a sell in May and go away kind of thing where it's kicking off April, May, goes down, doesn't really do anything, finishes off with a really bad month in September, and then kicks off in the big run up, in the big Santa Claus rally towards the end of the year? That is one potential way in which this plays out. Or do we get a quick correction now? We get a nice run up until June, July, and then we get August and September are terrible. We're just going to have to see how that goes. I'm curious. If any of you have an opinion on that, please put it into the comment section. Okay, we can see here ASX as well, very much starting to stumble. Okay, so pullback, move up, consolidate, move up, pullback, move up, immediately a pullback. It's definitely starting to tumble. And obviously stumble, and where would a pullback to 7.5 is great. Could it go back further? Sure, but minimum requirements are better. Nikkei as well, definitely starting to stumble. A pullback to 35,000 would be incredible here. These would be very, very good for the markets, very healthy. Okay, moving on to, okay, so Apple staying in this area, hasn't really done anything. What do you guys think? I think that there's I think there's a good chance it's gonna head down lower. The question is, will it hold at these recent levels of support around the 165? There is a fair chance it is going to do that. This is a double top, and often a double top can lead to a deeper correction, which could be down here towards the 135, 140 level, possibly. But I think for now, shorter term, I'm just going to go with this coming back down to test those levels, struggling a little bit. And we'll see what happens with that. We've got Amazon, looks great, man. Look at that. It's just pushing on past all-time highs. Amazon's infrastructure, its moat, so to speak. This is Warren Buffett speak. Its moat is still pretty much undisturbed, and it's doing fine. It's good. They're relatively impenetrable, so I don't expect to see much changing there. AT&T is just going to continue to keep pushing these levels. If it can get through that, we'll see. Then we'll go have a look at ARC Innovation. ARC is really struggling at the moment. Well, give me 1 second here. I was just going to take a sip of coffee. I didn't want to laugh at this. Look, one of the things that alarms me is I used to be an incredibly big fan of Cathie Wood's. I'm genuinely really big fan. I still have some ARC. I still have some ARC stock somewhere. Innovation and the Genome one, very much a big fan of that. Genomics. The problem is that actually, and there have been several articles on this, is that she's really underperformed where she shouldn't have. If somebody is talented, they should perform well when everybody else is struggling, and they should perform extra well when everybody is performing well. That's just basic kind of logic if someone is good at what they do. When they're struggling, when everyone else is doing well, that just isn't a sign of strength on any level. There's no way you can rationalize that. And especially when I look at her entries and exits into NVIDIA, and then I look at her kind of getting into Tesla, to me, if I was Elon Musk and she was saying, wow, you know what, we're really going to buy into Tesla, to me, I would be like, please don't, because that's a potential sign that things are going to be very bad for us. That's how consistently badly her selections, her choices have been. And I'm still a fan of hers. So I'm kind of not trying to make this political. I'm just saying, it's just that I think that the fact that when Cathie Wood's is your cheerleader, you're in trouble. So anyway, we're going to have to see how that goes. She's battling a little bit. I want to see them break out of this range. I want to see her break out of this range. Okay, everybody else is going to do it. Maybe it just needs a bit more time. We'll have to just see how that goes. We've got ASML. They're doing okay. They've got a consolidation going on at the moment. I think they're a bit kind of running around the 1,000 level. They could do with a retracement. They could just do with a minor correction down to 850 level and then pick up again. Glencore is doing fine. They're going to work up to the top of the range, and I just want to mark this top of the range over here. So they're going to head in towards that 475 area. Let's call it that. That's it over there. So I think they'll continue to push higher. Let's have a look at Tesco's. Tesco's doing very well at the moment, battling a little bit, possible double top here. There's some strong resistance. Again, I'm going to throw, it's there at the 300 level. But I do think there's some good chance that now back up above the 50-period moving average. I think there's a good chance potentially we could see them continue to push a little bit higher. Amex running out of steam. You've got to have a bit of a correction. 200 would be amazing for Amex. A nice bit of a correction there. Remember that when this happens, if you kind of get a lot of, if you're very much tuned into the media stuff, you're going to get JP Morgan, you're going to get all these different commentaries coming through when the market goes through 2 months of corrections, which it needs to do, which it's always going to do throughout its life. Don't let that stuff throw you off. It's just noise. Okay, pay attention to the signal. The signal here is we're in a bull market. The question is, every kind of a correction like this becomes a buying opportunity for serious, no nonsense investors. Okay, Berkshire Hathaway. Fine. Also looks like it's going to double top a bit. This will be impacted a little bit by this. For me, a beautiful opportunity would be back down to 370, but it might come back down to 400 and just stick in a range and consolidate before kicking off. KO, this is obviously Coca-Cola. They're battling with the 61 level here. They really are battling with it. Look at the kind of this pattern here of just stumble, stumble, stumble. So yeah, I think they're going to come under pressure and potentially move a little bit lower. We'll see if that happens this week. BP, crude oil's going up, so we know immediately BP and Exxon are going up. Okay, that's just a no-brainer. But worth mentioning here that Exxon has broken out of its range to the upside. General Motors also broken out of its range over here. It looks good. Fine. So that's free and clear. After a consolidation like that, they can often continue to run. Look at JP Morgan Chase is doing incredibly well here. 180 would be a beautiful correction. 164 would be an amazing correction. But I have to tell you this, guys, this is a quality trend on the weekly. I would actually expect a 180 at most. It's just a beautiful quality. I mean, this is phenomenal. That's probably institutional buying as well. It's just so consistently just amazing. That gets, I'm going to call it a 9.5 out of 10 in terms of rating. It's just incredible. Again, QQQ here. So this one is stumbling a little bit here. Could also benefit from a pullback to 400. Easy. Furthest I would even accept, would be very happy, would be 380. For me, those are buying opportunities. And if it pulls back to that within 2-3 months, it's back up at the old highs. Okay, so if this is freaking you out when I say that, kind of, let's just reframe that. Remember that all of those pullbacks become buying opportunities. That allows you to compound. So it's always good, because once you go back from that, you go back up to the highs, you should be better off than you were technically where you are now. And besides, people are often saying, well, I never know when to take profits. I never know when to take profits. The markets are signaling that now could, for individuals where that goes according to your personal investment plans or trading plans, this is where you potentially move your stop loss up, or you kind of have a plan that you start to look at. But obviously, I'm not providing financial advice. I'm assuming that most of you have spoken to professionals and you're looking to do that. Okay, bit of a double top happening here again with Adidas. I think overall it's relatively nice and healthy. It's bumping its head up against that 50-period moving average, amongst other things. So we might see it kind of wobble a bit, but I think the longer term trend for that should still be very much to the upside. Look at this. Meta does a consolidation and then a bullish engulfing bar. It didn't even want to retrace, doesn't even want to come back down. It's looking relatively bullish. I was talking about the bearish divergence here. I'm going to leave this for now, but it is very bullish. It really doesn't want to quit. And that's also potentially institutional buying. Then we get to Morgan Stanley. Still, I think this is going to continue to climb higher. Most of these are just battling a little bit with resistance, but I expect them to continue pushing higher. Nvidia, also consolidation. This could be similar to Meta, where it doesn't want to quit, but it is also looking like it's battling very potentially with 900 on the nose. And a pullback here down to 600 would be, again, absolutely incredible. I'd love to see it. Maybe it won't be able to come down to the 800 mark or potentially down to that sort of 700 mark. Let's see. Needs to do it. It's all a good thing. Netflix, consolidation wants to keep going. It looks okay to me. Looks fine. Again, all of these, you can see there's a bearish divergence here. Higher highs here. They could benefit from a correction. Okay. PayPal, it's trying really hard to break through that level. It looks okay. Let's see if it can do it. It's still above the 50-period moving average. So it is, believe it or not, more bullish than it was 4 or 5 weeks ago. So it has a better chance of breaking through now. Spotify, absolutely beautiful, fantastic week. Look at that. And we obviously must have spoken about that as a potential buy setup. That's on its way. It looks really good and looks like it's going to break through here. You can see in the past it's battled with that 319, 320 level. I think overall, I think it's very overextended now. I think a pullback to 220 would be amazing. Failing that, to continue up and pull back to 300 would also be a great option. These are all things we're going to have to see over the coming 6 months. Spider. Okay, so Spider, I spoke about that being a potential. Was that going to be enough of a correction? But actually now it's back down in this area. So now what I would be looking for would be somewhere in this area now would be a potential green candle. Let's see if we get that this coming week, if we're going to get that. And we'll see if that's going to be the case. FedEx also pulling back, so I would look for it to come back and test these areas. We'll see how that's going. A pullback into somewhere around 265 could be a very nice sweet spot for that. Tesla, let's have a look at this. So Tesla's obviously continuing to head lower. So here's the thing. Okay, so just for a moment, just humor me. The reason I used to love Tesla was because the guy convinced the world that electric cars were viable, that people wanted them. But he did this on the idea that if no one else was going to do it, he was still going to create affordable electric cars for the masses. That was what Tesla was going to do. That was the pillar upon which he built the brand and reputation. I will bring great electric cars to the masses and they will be affordable. That was what he did. And now, apparently, he's not going to do that anymore. He's going to focus on the robo-taxi. That's his words. He's going to focus on the robo-taxi and not necessarily concerned they're going to scrap the idea for the Model 2. And again, I'm just going to put those in like that's the suggestion at the moment. Let's put it this way. If Tesla is going to change its focus, if instead of like doing the Cybertruck, they had just continued to focus on bringing affordable EV cars now, they'd be better off now. But they focus on the Cybertruck for some bizarre reason. If they focused on just getting prices down and getting those cars more affordable, they wouldn't have been overtaken in the last year by affordable cars coming out of China, for example, and other markets. That's a fact. They would have still be competitive. They'd still be the leading one in that market. Now, here's the thing. Here's the next problem. Musk then promotes this idea that you can buy FSD, which is still very faulty, and you can then use your car and earn passive income because your car can be rented out as a taxi. So now what he's decided to do, get this, and people have bought into that idea. They're like passive things. The market they're going after is effectively the Uber market or Lyft market. There's a finite size market available to people who don't want to drive and would rather just get an affordable taxi. That's the market they're going after. They never talk about how much of that market is untapped. We know the market exists. We know that Uber did really well on that, but it gets really competitive. If you become an Uber driver now, you don't make a big salary on it. The margins are very thin for Uber drivers. So now what's going to happen is people with FSD using their cars are going to compete in that market. They're competing for the same customers for that. And in fact, here's the thing. If you've got FSD on a Tesla and your neighbor's got FSD on a Tesla, you guys, and you're both trying to do the robo-taxi thing, you're competing against each other, which means the margins become thinner and thinner and thinner. So to finish this off, the chef's kiss, and I'm sorry, but this is not genius. Elon says, we are now going to be competing against all of you customers of ours who have bought FSD and who are thinking of offering your cars as robo-taxis. We are now going to compete directly with you. We're scrapping all our other plans. We are going to focus on robo-taxis, and we are now going to be competing against you. So basically, he's opted to screw all of his existing clients who have bought into and invested money in the robo-taxis. Now, Tesla is going to be competing against its existing most loyal customers in a market that is already saturated with a whole lot of other things. Am I wrong about that? Does that sound like a really genius idea? Anyway, time will tell, right? Time will tell. If it's a genius idea, we'll see it take off. If it's a really bad idea, we're going to see the stock tank. If that's going to be the case. Seriously, it's very simple. In a year's time, if Tesla's down at $100 or lower, it can't be doing very well. We'll know if the Cybertruck is performing well because all I hear is horror stories. No matter where I go, I'm hearing every other Cybertruck is just breaking down within miles of the service when people pick it up. They're paying $100,000 for a car that just breaks down almost immediately. I'm hearing horror stories. I don't want to be pessimistic. I want to be optimistic. I can see the good that he's done, but I'm also hearing way more negative stories, and it's just absolutely crazy. And tell me I'm wrong about the cyber taxis. I keep saying cyber taxis. Now I sound like I don't know what I'm talking about. But the robo taxis. That can't be a good, it just doesn't, I just don't see. It's like if he said to me, you know what, this is an untapped market. We can go get everything there. I was like, oh, well, okay, I can get how you want to go do that. But I just feel like it's just going to compete with everything else. Anyway, I'll stop there. All right, I don't get it. Vanguard. Okay, so Vanguard's starting a little bit of a correction here, a bit of a retracement. And we potentially could see a correction down towards these old highs. All of that, again, would be fantastic. Let's have a look at Walt Disney. Walt Disney's doing really well. Again, I would like to see a pullback into that 110 area over the next couple of weeks, but we might even see that it wants to go up from here. We'll see. But again, a pullback, a break of the low of these weekly bearish candles would be really good to see them kind of pull back into these highs and then go that way. Let's have a quick look at bonds. So the bonds are still not getting so much love out of the US, the 10-year T-note. We don't need to look at all the bonds. Generally, these will give you good indication. Excuse me here. And you can see actually even going through to the Eurobond, which I've spoken about, which is trying to turn around. It's battling where it is. And actually, if bonds in general are not getting a lot of love, we're not going to see it really happen here. But this one is desperately trying to turn around. I think it's more bullish than the US 10-year T-note, but we're going to see. And then let's just quickly wrap up on cryptos. So cryptos, look here. This looks pretty good. I mean, that looks like a relatively nice bullish kind of triangle forming over here. Looks pretty good. I like the look of that one. I hope you guys do as well. Potentially, we could see this break to the upside. It's a consolidation, effectively, what we're seeing. Is it overextended? Yes, it's overextended, but the weekly is consolidating. So any kind of a pullback into that 60,000 area could see it continue to go higher. I do know that Ethereum is struggling a little bit here. We saw a move high there, but I also would highlight here there's some buyer moves. What I would be doing in this particular case is I would be paying attention to kind of whether we break through that kind of downward sloping line, get back up above the 3,500 level. We'll see. This is essentially going through a consolidation. Any kind of a pullback down to 3,000 here on a monthly basis, or even a little bit lower, would also be a good thing. And again, if it's institutional money and institutions start kind of taking some partial profits in the same way that they would with, say, for example, stocks portfolio, or reducing exposure, we could see similar types of moves here. This to me looks kind of like a bit of a range. I'm just going to mark this. Let's just mark that as a range, and let's see what happens with that. It's holding at these prices, but we could see a bit of a correction before it then turns around, and it's clearly overextended at the 200. It's gone parabolic. Bit of a correction down to the 100 levels, not a bad thing. The difference is between kind of bubbles that we've seen with some of these now and potentially those in the past. Let's just have a look at Binance. Is that the difference is there's much more institutional money going into cryptos at this point in time. Okay, much more institutional money going into cryptos at this time. And so, yes, there might be a bit of a bubble because it is fueled by lots of fans of cryptos as well. So absolutely could be a bit of a bubble. But I'm still more inclined to think that the next year or two is still gonna continue to see more integration of cryptos, and therefore, even though we have corrections, I don't necessarily think that they will be. And obviously, I could be wrong about this part, and I'll be the first to say if I am. Whether we get corrections that are as big, as scary, as kind of bubbles bursting as bad as they have in the past. I'm kind of leaning into the fact that, yeah, the markets are very bullish, and we might have big corrections, we might have big swings. But I don't think that the appetite for cryptos has gone anyway. And let's just have a look at one more thing and then we'll wrap up. So just for fun, let's have a look at vaporware. So we've got DJT. This is sort of Trump's vehicle, which was obviously overvalued at multiples of billions, even though it uses no proprietary software, offers no service, has tiny number of users, offers zero value to society in any way. And you can see here that it has come back out at these levels. A lot of people were buying at these levels, and it's basically come back down to the initial evaluation price. Expectation this week, it is apparently one of the most shorted kind of stocks in history. We'll see. The pressure could potentially move it down towards these areas. If that happens, one of the things that will happen is there are currently shares held by certain people, and as the pressure comes down, because there's a limited number of outstanding shares, there's actually very little. There's not as much pressure that the bears can put on it beyond a certain point, unless people who currently own the shares are able to sell those shares. Then we would see it start to accelerate. And so there is a possibility that if we see it hover near these lows, and then every time we see a significant drop, which is matched by maybe large volume spikes in that, we would start to potentially see that whoever has shares is trying to get rid of them. They're trying to get out of them, or at least sell them before it tanks any lower. It'd be very interesting to me to see this thing kind of run underwater. And obviously the SEC already looking at it. There's a couple of guys that have admitted guilt on a few other things, insider trading. So there's already just a whole lot of mud around this kind of thing, and we would expect to see this happening. This would be a good thing if it happens, because obviously none of us are really fans of fraud. We want to see companies held liable, and this is just one of those interesting things. The kind of true value for this does imply, looking at the monthly, that it sits around 31 bucks. We'll see if that's going to be the case. It's going to be an interesting week to watch if it follows through, and if it does start to come back down towards that $32 level. We'll see. Remember, there's only a limited number of outstanding shares, and therefore sellers can really only influence those unless people who own any of the shares currently start to sell off those. Then that kind of pressure, then it starts to flow that way. So on that note, ladies and gentlemen, please be patient. There are a lot of opportunities on the horizon, and I wish you nothing but the best in your ventures this coming week, and just have a great week. So thank you.